Hello students, hope you are doing well. In the last class, we have solved a couple of section C and section B sums for our taxation subject in our YT mastery classes. Now students, we are focusing on the mock paper, and just keep one thing in mind. We are doing the most recent mock paper, that is the taxation pre-December 2023 mock, to ensure that we get complete information which is very recent, and also maybe there's a possibility that your paper might be a little bit familiar according to the test level and obviously your level of difficulty, level of information which is being tested, which chapter is being tested more and everything. So probably you might get a similar paper in your examination. I'm not confirming anything because I'm not preparing the paper, but obviously you can get a most recent information which is obviously very beneficial for the students. So ACC aspirants, let's get started. Now we are going to be giving our examination on the center based platform, CB platform, so that you can get also an understanding to the interface of your CB platform, so that when you actually go and give your examination, it's not like, oh, the platform is new, I'm supposed to understand it in detail. And obviously it is a bit congested, the platform, because on the left hand side you will be given your question, on the right hand side you'll have to solve it. Also there will be different scenarios that you have to go through. Along with that, you will have your calculator, your scratch pad, where you want to type anything you can type. So there are a couple of things which are there within the interface. So if you give your examination directly through the CB platform, you will get a familiarity of how the interface looks like. Okay. So when you're going for the examination, it's nothing new for you. Okay. So guys, I'm just going to show you firstly that how you're supposed to actually go to the ACCA Global and actually perform your examination. So firstly, you'll click on the website ACCA Global. Once you click on ACCA Global, it will show you this website, that is ACCA Global Home. You click on that, guys, and you choose students. When you choose for students, you have an option called Study Support Resources. So you click on Study Support Resources. Now you have three different things here. You're going to go to ACCA Qualification, wherein you're going to choose your preferred subject. We are having taxation, so I will choose taxation. Now there are a couple of things here. The syllabus that is being covered, the ACCA Study Hub is there. That is, if you don't want to purchase any book, don't rely on any other different author like Kaplan or BPP, but you can just rely upon the direct material sources which is available through ACCA, right? So they are charging you a lot of fees for the examinations, but they are providing you with all the guidance and all the study support material. Okay, guys. So you can also choose to study from ACCA Study Hub, and obviously you have your CB platform here. That is, you can click on past exams and question practice. If you see this point, it is written past exams and question practice. You will click on that. Once you click on that, they will ask you to log into their practice platform, guys. So you're going to click on this arrow, which will actually get you to the practice platform. Okay. You're going to log in using your user ID and password and sign in to my ACCA. Once you sign in through here, you're going to have a catalog of your subjects and accordingly the examination that you want to choose, you want to pick to actually perform on. So guys, we are going to look for taxation here, and that is the last paper, as you can see, taxation. Now we're going to choose UK here. So if we click on UK, once I click on it, ACC official resources open up, and then we are going to click on ACC official resources, which will bring us to past exam library, practice exam, specimen exam. So we are going to have practice exams. In the practice exam, you can see I've already assigned that paper here, but it will show you like this. Okay. So we are doing right now Tax UK pre-December 2023 mock. Okay. Now you're going to assign yourself, and as soon as you assign it, if you see on the left hand side, this option is available to you right now. That is pre-December 2023 mocks, wherein it will ask you to start the examination. You can click on start examination. And once you click on start examination, guys, you will be given 15 minutes. So there is a set of instructions which are provided to you to be able to understand the interface. But since we are doing it right now, I think you should already be knowing before you give your examination. Also, it is better off to give your papers directly through the CB platform. So you will be very much comfortable and familiar with it. It will be very convenient for you when you actually give the examination at the center or at your home base, wherever. Okay. Now, guys, there is a set of instructions, as I told you, is mentioned here. If you can see on the right hand side down corner, it is a next option. So you click on next option. Once you go through those instructions, there are a couple of instructions, that is clicking on next will get you to the next question. Clicking on previous will get you to the previous question. Then there is flag for review also. So if you want to flag any question for review, maybe your any question is doubtful to you, you can just flag it. Maybe you can say like it's like highlighting that question, so that if you want to get back to that question, you can directly get back to which question it was. Okay, moving on to the next. Yes, there will be any sort of highlight which is provided to you. So if you want to highlight any line which is doubtful to you, which you want to review, so you can highlight that line also. And you will be given a calculator and a scratch pad. So calculator, if in case you're not, I mean, obviously you are provided with a calculator. I mean, you have to get your own calculator at the center based or home based. You're allowed one calculator at the home based examination. And you can also have your strike through if you have a lot of information but something you feel is irrelevant, so you can strike through that information. It will be invisible for a little time until and unless you undo it, and the remainder of the part that you want to see, that you can look at directly. Okay, then there is scratch pad gives you an opportunity to do your calculation. I mean, note anything down when you're doing a couple of calculations together, that okay, this is the income tax liability that I computed, then this is the next income tax liability. So usually if you want to keep a note of it, you can just type it there. Then if you want to add any symbol, guys, like dollars or pounds or anything, you can add the symbol also. Especially in your tax examination, you're going to use pounds, right? So you have to mention that symbol also when you're doing the calculation, maybe mention the amounts in pounds. Okay, then the most important here is the option called navigator. Navigator, if you click on that option, it will actually open up the questions for you. So you can just go to whichever question directly you want to, rather than just clicking on next and previous. So navigator is quite important, guys. And after you are going to end your examination, after the last question, you will have an option to end your examination. So you're going to end it. Okay. Yes. After that, once you end it, you will get an option to review screen, if in case you've missed any question or anything. And eventually they'll ask you 2-3 times a confirmation if you want to submit the paper or not. And the paper will eventually end. Okay, guys. As I told you, there are 3 sections involved in your tax examination. That is section A, section B, and section C. Okay, they are giving you an exam screen summary. Okay, so a section A will be 30 marks. There will be 15 questions of 2 marks each, which will give you 30 marks. In section B also, there are going to be 15 questions of 2 marks each. That again is going to be 30 marks. But the only difference between A and B is that in section B, you will have been given 3 scenarios, and on the base of those scenarios, you will be given 5 questions. Okay, so the 5 questions that are there, those are related to the 3 scenarios which are provided to you. Okay, whereas in section A, all questions are individualistic. Okay, lastly, in section C, there are going to be 3 to 4 questions depending on what they want to actually ask you in the examination. It could be 15 marks, 15 marks, and 10 marks, or 10, 10, 15, something, 5 marks. So they will, they can choose whatever they want to. So they usually you'll be having 4 questions in total. Okay. Then, yes, and section A and B is going to be complete MCQ. Okay. After you've gone through your instructions, they will ask you if you want to begin your exam. So once you click on yes, you will begin your exam. For reading the instructions, you will be given 15 minutes. But if you read the instructions in 5 minutes, that doesn't mean that you're going to get the 10 minutes for writing your paper. once you actually click on next and choose to begin your exam, those 15 minutes are lapsed. Okay. So I choose to begin my exam. Yes. So they're showing me we are starting off with section A right now, and you can click on next. As soon as you click on next, you will have your first question provided to you here. Okay, guys. Now just remember one thing. When you click on navigator, okay, I hope this option of navigator is visible to you. When you click on navigator, you will be having this question sheet wherein whichever question you want to attempt first, you can do so. And also, I think this part is covering here. So also they will show you here, you have an option to flag for review. So you can click on flag for review if you're doubtful about it. You can click on close all. On the left hand side, you have your scratch pad. Okay, as soon as you click on scratch pad, you will be able to note everything down, whatever you want to. You can also copy paste, guys. Just click on it. I mean, just take that thing which you want to copy. So you'll do Control C and you can do Control V here. So it will be copy pasted. Oops, I selected one answer by mistake. Okay. Then comes the calculator. As soon as I click on this calculator, a calculator will open to me, right? I can calculate anything here directly if in case I do not have my own calculator with me. And if I don't want it, I'll just click on the cross. Okay. Then any part if I want to strike through. So I'll just strike through this part. Yeah. So you can see it is now cancelled out. Okay. If I want to unstrike through it, I'll just click on it again. So it will be it is undone, right? Now, then we have an option of highlights. So if I want to highlight any line, specifically this line I want to highlight, right? So I click on this and it is highlighted to yellow. Okay. And if I just take that again, I'll click on remove highlight, it will go off. Right? So these are all the instructions. If I want to add any symbol, especially while doing the sum, I can add my symbol of pounds and everything whenever in whichever cell I want to add it to. Okay. Now let us get started with the question paper. I think all the instructions here are covered, guys. Yes, one more thing. If you click on navigator, they will show you the status of your questions. So see, I am right now at question 1. I have not solved it yet. Once I click on next, it will be completed after choosing an answer. If I don't choose an answer, the status of this question will show incomplete, and others I have not seen it yet, so they are showing me unseen. Okay. Here also directly if I want to flag any question, I can just flag it, right? And get back to it whenever I want to after I'm done with the paper or anything. Okay. So let's get started. I guess this was it, guys, which was informative enough for you, I hope. Now let's get started with the paper. So this is your first question, guys. In examination, if you will see, you will have here a time limit. Okay. That is how much time is remaining. As soon as you click on begin, your time period will start. Okay. So it will count down by 3 hours. Okay. So that will be given to you. Here it is not given because here you do not have a time limit to complete your paper. You can complete it whenever, however you want to. Okay. After the completion of this paper, guys, we are going to also show you that how you're supposed to check whether how many marks you scored, where did you go wrong, what was the correct answer and everything. So once we are done with the paper, I'll also show you that part. Okay. Okay. Now I think everything is done, start to end. Let's get started with the question paper. So on 8th August 2024, Shelley submitted her income tax return electronically to HMRC for the tax year 2022-23. On that same day, she paid the outstanding tax due for that return of £10,000. Okay, so that means for that return of £10,000, the tax due of £10,000, she paid it on 8th August 2024, but it is for the tax year 2022-23, right? So for the tax year 2022 and 23, her tax period ends on 5th April 2023 and it is an individual. So her return filing date should be the next Jan. So the Jan which comes next is nothing but 31st Jan 2024. This should have been her due date for the payment of tax. Okay, but she has submitted her income tax return late, that is on 8th August 2024. Right? So that means she has submitted late, that we can know from here. Now, what is the maximum penalty that can be imposed by HMRC in respect of her late filing of Shelley's income tax return? Okay, so if you remember, if you go through that chapter of tax administration of an individual, firstly, if in case you cross 0 days, I mean, if in case you actually even, submit 1 day late, the minimum penalty that is charged to you is £100. So £100 is the standard penalty charged to you. So the standard penalty will be charged. Plus, she has actually exceeded how many months? She was supposed to file the return on 31st Jan 2024, but she has filed it on 8th August. So that means February, March, April, May, June, July, and August. So she has filed 6 months and 8 days late, right? 6 months and 8 days late. So technically the next penalty that will be charged if in case it is exceeding 3 months. Okay, this is any which way 6 months late. So on exceeding 3 months also there is additional penalty which is charged, which is nothing but £10 per day for a period of 90 days. Right? So £10 per day for a period of 90 days, that will give me £900. Because obviously the whole 90 days she has covered, right? Up to a maximum of 90 days you can charge, not more than that. Okay, so 90 days into £10, that is £900 additionally is charged. Okay, then comes the next part, that is, so for the first 0, even if she is late by 1 day, the standard penalty is charged. She is exceeding 3 months. So when she is exceeding 3 months, from the first to the third month, that is 90 days maximum you can charge, and that is £10 per day. So that is what we've added, £900. Okay, but she has exceeded the 6 month also, right? So there is one at, even if 1 day is late, the standard penalty will apply. If it exceeds 3 months, then 90 days maximum, £10 per day. And if she exceeds 6 months, then in such a case, these two will be applicable. Plus, additionally, on her tax liability which is due, that is £10,000. On that, additional 5% will be charged. So all this will be payable, not just that 5%. Okay, all this will be applicable. Plus, she will pay additionally 5%. And if in case she exceeds 12 months, so again she'll pay additional more 5%. Okay, so £10,000 into 5%, that will give us £500 additionally she'll have to pay. So Shelley in total for the late submission of return, she has to pay a penalty of £1,500. Okay, I hope guys start to end this question was clear to you all. Very simple questions, not too much to deal with. I think the December mock is easy, or probably just tax is a little bit easy, okay, when it comes to examination. But guys, don't just relieve yourself by it and stop studying. Please study well. To get an assurance that you're going to clear the examination, you have to clear whichever kit you're choosing. The study text and the exam kit is to be completed, whether it is from BPP or from your Kaplan kit. Or if in case you're referring to ACCA Study Hub, please do that completely, because there are a n number of questions, ample of questions in your Study Hub available also, right? We'll click on the next one. Okay, so let us look at this scenario now. On 1st November 2022, Lucas granted a 20-year lease of a freehold property to a tenant in return for a premium of £15,000. Okay, so technically, maybe the tenant to him, it is a short-term lease firstly, because any lease of property which is less than 50 years is considered short-term. So here it is a 20-year lease. So on that she has received a grant on the lease of that property. Sorry, not a grant, a premium, right? She has received a premium of £15,000, right? Technically, the tenant would have said that you can keep the £15,000 like as a fixed deposit right now itself, and the remainder of the amount I'll pay throughout the year, okay, throughout the 20 years. Now, 15,000 premium that she has received, Lucas has received, sorry, not she, he, Lucas has received 15,000 pounds. So the premium is 15,000 pounds. Now, how much of this premium is, deducted as an allowable expenditure, not an expenditure, but an allowable deduction, and how much of it will be taxable? So for that, if you remember, there is a formula. It is nothing but premium into n minus 1 into 2%, right? Premium amount into n minus 1 into 2%. This is the allowable deduction, right? So our calculation will thus be 15,000 pounds into n is 20 years. N is nothing but the period of lease term. 20 years minus 1 into 2%. That will give us a value of 5,700. Correct? It will give us a value of 5,700 pounds. So this can be claimed as an allowable deduction. So 15,000 is my total income, but from this allowable deduction is 5,700 pounds. So the remainder will be 9,300 pounds. Okay. So this is the amount which will be taxable. Obviously, it will be option D here. Okay. Moving on to the next question. Okay. So guys, Fraser ceased trading on 31st January 2023. After many years of business, his recent trading profits were as follows. Okay. So that means this is an ongoing profits that she has been generated. Okay. But she is trading her, she's ceasing her trade on 31st January 2023. Now guys, she used to prepare her accounts. She used to complete her period every year on 31st July 2021. You can see 31st July 2021, 31st July 2022. So this 8,900. For this, she would have already paid the tax because this is in the year ended 2021-22. So she would have paid the tax by 31st January 2023. Correct? So this has already been paid. Wait. It is 2021-22. Yes. Now, for this year end, okay, that is year ended 31st July 2022. Year ended 31st July 2022. Her total amount is 7250. And after that, she ceased her trading on 31st January 2023. What amount of trading profit will faster be assessed on the tax year 2022-23? So in the tax year 2022-23, firstly, this year comes into existence because this is the year ended 31st July 2022, right? Your tax year starts from 6th April 2022 and ends at 5th April 2023. So this year is ending in this tax year, correct? And the next 6 months period, that is 31st January 2023, that is also ending in this period. So all of that which is not taxable yet, which is not taxed yet, that will now be assessed for tax amount, right? This has already been assessed in the previous year, and for that you will pay on 31st January, right? But these two, they have not been assessed yet. So what is her profit that will be assessed for the year that we are supposed to identify? So obviously, this and this both will be assessed on 31st January 2023 and paid for the tax return. Okay, in the tax return. So it will be 7250 minus, plus 3,300. But guys, they've also said that Fraser has unused overlap profits of 2,200 pounds. Now, Fraser has unused overlap profits. That means when she started her trading, she must have double taxed certain amount because of the accounting period thing. Like if you remember the current year basis and the actual basis and everything, that is the basis of assessment of an individual. then she must have paid additional tax. That means some profits of her account of her period would have been double taxed. So that for that you can claim a deduction now, that is 2200 when you're seizing your trade. Okay, so your total income which will be assessed is 7250 plus 3300 minus 2200, right? So that will give you 8350. I'll write here 8350 pounds. Okay. I hope guys start to end it is clear. If in case any other doubts regarding the dates, you can ask me directly on the comment box. Heading on to the next question. Okay guys. Now we have to look here which two of the following statements about allowable capital losses for an individual are true. So you have to say that which two of them are actually true. Okay, for the allowable capital losses of an individual. Okay, firstly they are saying the annual exempt amount. Obviously you all know what is capital losses, guys. Capital losses are nothing but if I sold an asset. Okay, if I sold an asset, maybe I had purchased the asset for 5,000 and I sold it for 3,000. That means it is a loss to me, correct? Because 3,000 is my sales proceeds and 5,000 was the cost. So technically I have a loss of 2,000. So that is a capital loss that I have. Okay. Now, this capital loss can be claimed as a relief. Now, let us see what they are asking for firstly. So, you have to tell which of the following two statements are actually true. The annual exempt amount, that is 12,300 given every year for my chargeable gains, as a deduction like the personal allowance is given. For capital gains, your 12,300 annual exempt amount is given. That is deducted before any brought forward capital losses are utilized against the current year gains. Obviously not. When you're doing your capital gains calculation, guys, if you go through your capital gains of an individual, you take the capital gains for the period, for the year which is considered, right? Capital gains, sir. Right? From that, you deduct the current year capital losses. Right? And then you will get nothing but your net capital gains. From that, the first thing that you deduct is your AEA, okay, annual exempt amount. After that, you will deduct your brought forward capital losses. That means the capital losses of the previous year, which needs to be adjusted with the current year. Capital losses. Okay. So technically, this is the whole, pro forma. Now they are saying that the annual exempt amount is deducted before any brought forward losses are utilized against the current year gains. Yes, the annual exempt amount is obviously taken before the brought forward losses are adjusted against the current year gains. So the first statement is correct. Right, I'll click on the first statement. Further, they are saying that the current year capital losses remaining after offset against the current year chargeable gains can be carried back against the prior year chargeable gains. Always remember, guys, your capital losses can be adjusted in the current year. After it has been adjusted in the current year, it can be carried forward. It cannot ever be carried back. Okay. So technically this statement is wrong. I have to identify the ones which are true. So I will not click on B. Then the next part is brought forward capital losses need to be used to full extent in the current year, even if the annual exempt amount is then wasted. So technically, if in case there are any brought forward capital losses, they need to be used in full extent in the current year, even if the annual exempt amount is wasted. That is not true, because first my annual exempt amount is taken, then my brought forward losses are deducted, right? So annual exempt amount is never wasted by adjusting the brought forward capital losses, because first any which ways I'm deducting the annual exempt amount. So this is also not true, right? So obviously D will be true, right? Because we found out, but we'll check why it is true. excess current year capital losses are carried forward indefinitely until future chargeable gains arise. So when the capital losses are carried forward, they are obviously carried forward indefinitely. If in case in the future periods also I have a loss, even after 10 years, if I want to adjust that capital loss in the chargeable gains that I have after 10 years, I can do so. So it is going to be carried indefinitely. So option D is the correct option, right? So I hope it is clear, guys. It will be option A and D, which is the correct response to this question. Moving on to the next question. Okay. Now we are supposed to state here whether the following statements are true or false. Identify by ticking the relevant boxes for each statement about furnished holiday lettings. So what are furnished holiday lettings? It is like a business of the company, okay, or an individual, right? Now furnished holiday lettings where I'm, actually providing some sort of hotel rooms or anything where it is completely furnished, okay, for 1 day, 2 days or anything. It is like a business too, okay. Or maybe I could give you an example like, I had a building. Okay, it was a 4 floor building. Maybe I did not want this part of the building, this top 2 floors. So maybe I've converted into a hotel room. Okay, so I provide hotel rooms there. Now, obviously, when I'm providing hotel rooms, these are furnished hotel rooms. Okay, and people are coming and staying for 1 day, 10 days, 12 days. So that is technically my furnished holiday lettings. Okay, it will not be classified as a room given on rent or anything because rent is like a rental term period which is like 10 months, 11 months to the same tenant. But here I'm actually kind of doing a business of providing the hotel room facilities to the tenants. Okay, so identify which of the following statements are true regarding the same. Losses from furnished holiday lettings can be set off against the owner's total income for the same year. Obviously, just remember one thing, whenever you're assessing your property income, your furnished holiday lettings is not going to be aggregated into the property income. Okay, furnished holiday lettings are to be dealt with separately because that is like a business thing. Whereas property income, it is like, where I'm giving houses on rent, which is like, maybe I had a free apartment, okay, which was not being used. So I gave it out on rent to a tenant. Okay, so technically that is my property income. That is not my business. Okay, but if in case I'm, actually letting off furnished holiday lettings, that is my business. So both are different, and thus whenever I'm, taking the property income, always remember all my houses. Maybe say I have more than 2 houses or 3 houses, right? I have 2 houses. Both of those houses are given out on rent. So technically I will have property income from this, right? From one house, I'm actually getting £5,000 rent per annum. From the second house, I'm maybe getting £5,000 per annum rent. But maybe also I'm incurring a lot of expenditures. Maybe I did some repairs and repaintings to the house this year, because of which I have a loss this year. Okay. So the loss maybe is £1,000, right? So technically, this will be aggregated, and it's not like this will not be considered. This will be aggregated, and I will have a net property income of £4,000. So what did I do? I took both of these houses and took the aggregate of them, right? But if in case I have a hotel room also with that, from which, if I'm earning an income of £20,000, that will not be aggregated with this because there are separate rules for the business that I'm letting out. This is I'm just letting out my house, but here I'm doing a business of letting out the hotel rooms to the customers, to the client, to the customers, right? So technically that is separately treated, that is not aggregated with my property income, right? So this statement, losses from furnished holiday ratings can be set off against the owner's total income for the same year, that cannot be considered, that is to be treated separately overall, right? So this is false. Then let us look at the next part. Profits from a furnished holiday letting are treated as relevant earnings for pension contribution purposes. Yes, this is true, guys. In your pension contributions, if you see your relevant earnings, in the relevant earnings, if in case you're actually giving out any property, if you're letting out any property furnished, So that is a part of your relevant earnings. That is a calculation done in your in your pension income. You can go through that. So it is obviously included within the pension income, right? So this is true. Then a furnished holiday letting would qualify as a business asset for the purposes of business asset disposal relief. Okay, so business asset disposal relief, BADR. This is a residential property probably. Okay, maybe it was a residential property, right? Not technically a residential property, but maybe I've converted into a hotel now, right? So it is my business. Kind of, you can say it is my business related asset. Okay. So any assets which are used in the business of the company, for them, they are qualified for BADR. Okay. That is business asset disposal relief. Okay. So on business asset disposal relief, you are charged only 10% up to 1 million pounds and everything. So those rules are there. So yes, my furnished holiday lettings is like a business asset for me. So it will be qualified for my BADR. Okay, so it is false, true, true. I hope, guys, it is clear to you this sum. Moving on to the next question. Which one of the following would not qualify under the sufficient ties test for purposes of determining whether someone is resident in the UK? Okay, so there are certain ties for determining if in case you cannot be determined automatically non-UK resident or automatically UK resident, you rely upon the ties. That are 5 ties which are available, and depending on your previous year's residency, those ties would be, according to those ties, you would be determined or you would be classified as a non-UK resident. Okay, you might be UK resident or you might not be, depending on the number of ties you've met. Okay, so here let us see which one of these are not a genuine ties. Okay, because they are asking which would not qualify under the sufficient ties test. Okay, so the ties were family, accommodation, my house, days in UK and everything, country and everything. So those are my 5 ties. So let us look at this. First one, first option, having close family in UK, such as UK resident spouse. Yes, so this is meeting the tie of family, right? So that is meeting the tie of family. So this is not the answer because it is meeting, right? We have to identify the one which is not meeting, right? So family tie is meeting. Being in UK for more than 45 days during either of the previous 2 years. So there is also a tie which is known as days in UK, right? You will be a resident this year, depending if you meet this tie and a couple of more ties, depending on how many days you've stayed and everything. So that tie is nothing but the condition is that if in the previous 2 tax years, you have at least stayed in UK for 90 days, if in case you've stayed in UK for a period of at least 90 days in the previous 2 tax years, then this tie of days in UK is met. But they are mentioning that being in UK for more than 45 days during the previous 2 tax years. So that means this tie is not genuine. The tie is you have to be 90 days available within the previous 2 tax years in UK. So option B is going to be the incorrect option, right? So we have already found the answer, but let us look at option C and D also. Having a home available for the tax year in UK, which is stayed in by the individual during the tax year. Yes, so having a home in UK where the individual has stayed in his home during the tax year, so that will be his accommodation tie that he has met. Okay, so this is also a genuine tie. Now the last one, undertaking substantive work in UK, his substantive work is there in UK, so that will also meet another tie of the work. Okay, so technically, guys, C and D are genuine ties, and only option B is not a genuine tie. So that will be the correct response here. Okay, moving on to the next question. Okay, so I guess this is for NIC contributions. Let us see. Bella is self-employed. Just give me 1 minute, guys. We'll just take a break of 2 minutes, okay? Okay, guys, let us continue. I'm so sorry that I had to abruptly take a break of 2 minutes. Just had a call. Now, guys, Bella is self-employed. Okay, so for the tax year 2022-23, her trading income was £70,000. Okay, Bella had no other sources of income during the tax year. Identify by clicking the correct items from the drop-down box, the class and the amount of national insurance contributions payable by Bella for the tax year 2022-23. Right? So if she is self-employed, she has to pay class 4 NICs and also class 2 NICs, right? She has to pay these two. If she was employed, then she must have paid class 1, class 1A, depending on if she is having a taxable benefit separately or not. Okay, and her employer will also pay class 1 NICs for the employee. So here, if she is self-employed, she will pay class 4 and class 2 NICs, right? Now, guys, if she is paying class 4 NIC, what will be her NIC contribution? And she's paying class 2 NIC, what will be her NIC contribution? But guys, here look, let us look at what they are testing. Okay, it is just class 1 and class 4. So technically they want to test us. Okay, I'll show you if in case it is not clear. It is just class 1 and 4 which is available. I don't know how much clear it is to you because it is very small. Okay, so she has to, we have to calculate class 4 NICs that are there for her. So class 4 NICs, guys, if in case my self-employed income exceeds £12,570, then it will be chargeable. Up to £12,570, it is exempt, right? And if in case further it exceeds, so after it exceeds £12,570, so from £12,570 up to £50,270, she will be chargeable at 13.25%. Okay, she will be chargeable at 13.25%. Sorry, not 13, 10.25, right? I forgot the percentage. 10.25%. And if it is above 5270, then additionally she will be chargeable at 3.25 percentage. Okay, so 10.25% will be the charge up till £50,270. Above £50,270, she will be charged at 3.25% of her total income. Okay? Now, how you will classify this? Till 12,570 pounds, guys. Till 12,570 pounds, it is exempt, right? Her total income is 70,000. So that means it is exceeding 50,270 also, right? So firstly, the threshold that is there, it is nothing but 50,270 pounds minus 12,570 pounds, which is completely exempt. On that, she will be charged 10.25%, right? So the value will thus be 50,270 minus 12,570 into 10.25%, right? That will be 3864.25. I'll take it as 3864, right? But obviously, her income is exceeding the threshold of 50,270 pounds also. So, above 50,270 pounds, that is 70,000 pounds minus 50,270 pounds. On this remainder, you will charge 3.25%, right? So it will be 70,000 minus 50,270 pounds, which is 19,730 into 3.25%. That will be 641. So 3864 plus 641, that will give her 4505, right? So 4505 is going to be the amount, guys. I hope it is clear to you what will be the value of class 4 NIC payable. So I'll choose she'll have to pay class 4 NIC. Class 1 NIC is paid by the employee and the employer, not by the self-employed person. So amount will be obviously 4505 pounds. Okay. I hope, guys, this sum is clear to you all. Moving on to the next question. Okay. Okay, guys. Now let us look at this scenario. This is about inheritance tax, as far as I can see. Okay. Grayson is an additional rate taxpayer and wishes to make a number of gifts for the tax year 2022-23. He has already used his annual exemptions for inheritance tax for purposes for tax year 2022-23. So always remember, on her PETs or CLTs that she is making, PET is made to, if in case you're making it to a connected party like your spouse or children or anyone, then it is known as PET. When you're making the, your estate is being transferred, your gift is being given to a trust, then it will be considered as a CLT. Okay. Now, which of the following gifts is not a fully exempt transfer for IHT tax purposes? So you have to identify the ones which is not a fully exempt transfer. Okay. That means on which you will be taxed for inheritance according to the gift you have given. Okay. So firstly, a painting worth 500 pounds given to his friend as a gift on the friend's 40th birthday. Okay. So always remember one thing, guys, when you're making a gift to your friends or anyone, small exemption is available, and the small exemption is available up to 250 pounds. If in case it exceeds the 250 pounds, then in such a case, small exemption will not qualify, and on the total 500 pounds, you will be taxable. So here you have given a benefit, here you have given a gift of 500 pounds, correct? So 250 pounds small exemption, it is any which way is exceeding. So 250 pounds small exemption will not apply, and this whole thing will be taxable. So yes, this is a taxable amount, correct? So I'll click on option A here. Then guys, 1,000 pounds to his neighbor as a wedding present. Okay, so that means they are being wed. Okay, and on their wedding, they are actually allowed up to 5,000 pounds from the parents, 2,500 pounds, up to 2,500 pounds worth of gifts from their grandparents and from their siblings, I guess. No, not siblings. Grandparents and from the spouse. Okay. So if like the groom is giving 2,500 pounds worth of gift to the bride, then it is not taxable. Okay. Under inheritance tax. And 5,000 pounds is if the parents are giving, it is not taxable. And lastly, if anyone else is given, up to 1,000 pounds, it is not taxable. Okay, that means my neighbors or anyone is giving, or I am giving to anyone, then it is not taxable. Okay. So this is a exempt because it is 1,000 pounds mentioned, which is given by the neighbor, and for neighbors, 1,000 pounds is allowed. right? Then the next one, £2,000 a month to pay for his granddaughter's private school fees. So this is like expenditure from the income. So there is an exemption which is available. That is whatever expenditures you're incurring from your incomes, like maybe the grandfather is paying for his grandchild school fees or anything from his income every year. So that is technically that he's just helping his grandchild to actually give him the education facilities. So if I'm generating yearly income and from that I'm paying any expenses for my grandchild or anyone, so then in such a case, whatever is the amount, that will completely be exempt. Okay. So here, even if it was 2000 or 12,000 or anything, everything was exempt. Okay. So that means this is completely exempt, right? So this will not be the answer. We have to identify the one which is not exempt. Okay. And that we've already identified. We have got the answer, but I'm just showing you that why others are not taxable. Okay. B, up £2,000 to his grandson as a gift on the grandson's wedding day. As I told you guys, grandparents and the spouse are allowed up to £2,500 of gifts on the wedding day. Okay, provided the wedding should be happening. Okay, the wedding should be conducted. I mean, it should be occurring to ensure that the gifts are giving solely for the purpose of wedding. So I think everything else is exempt. Only A will be taxable. I hope guys it is clear to you all. Okay. Let us look at the next scenario. Yellow Limited incurred some capital expenditure in May 2022. Okay. So they have incurred certain capital expenditure in May 2022. That is within the period of, okay. So which of the following qualifies for the 130% super deduction for capital allowances? Right. So from 1st April 2021 to 31st March 2023, if there are any assets which are actually purchased. So on that, for a company, okay, now Yellow Limited is a company. This is only available for company, not for individuals. So during this time period, if any assets are purchased, which are specifically not just assets, but plant and machinery, only plant and machinery. Okay, only plant and machinery, then in such a case they qualify for a super deduction of 130%. That means if I purchased an asset for £10,000, I will get an allowance on it of 130%. That is, I will get £13,000 of capital allowances. What is the benefit of it? You can actually add it to your allowances, and then when you calculate the loss relief, at that time you can deduct more allowances. So you will get more loss relief. Okay. So that means you're given a super deduction of £13,000 here. So nothing will be taxable and you will get a deduction of £13,000, right? So now this is purchased on May 2022, the following things, right? Now you have to tell us whether which will qualify for a super deduction. Okay. So always remember it is just a plant and machinery which will qualify. Anything else will not qualify for super deduction. So firstly, they are saying a new equipment costing £80,000. It is purchased on May 2022. It is an equipment, so it is a plant and machinery. It will definitely qualify for the super deduction. So option A is going to be the correct response. Let us look at the remainder. Option B says a new zero emission car costing £10,000. So for this guys, you will get a first year allowance, right? You will get a first year allowance because cars which are zero emission cars and obviously those which are newly purchased. If it was second hand, then you would have got FYA 50% or something. I think not even that. It will go to probably just your main, right? So if in case it is a second hand car that you've purchased, so in that you will not get first year allowance. First year allowance will be given if you purchased a new car and that is a zero emission car. So the complete amount will be exempt. Not even if it was 10,000 or 20,000, anything, complete amount is exempt. For FYA, there is no restriction. Okay, that is known as first year allowance. Okay, so B is completely exempt, and obviously you will not get 130% super deduction for that because that is qualifying for FIA. Cars are not qualified for super deduction. Only assets which are plant and machinery are qualified. Okay, then a new long life asset costing 1,60,000 pounds. A new long life asset. So long life assets are assets which are having a life of more than 30 years, like your water heating system within a building, or maybe your drainage system or cold water system or electricity. Those are all your so special rate pool assets. Okay, and they do not qualify for super deduction. On that, for a company, they will get 50% FY. Okay, so this is not going to be the response. Correct? It is option A only. And the last one, they are saying a second hand lorry costing 25,000 pounds is purchased. Okay. So guys, lorry is a plant and machinery. I agree. And it is purchased on May 2022. That also I agree. But the only thing is that it is purchased second hand. It is not newly purchased. So on second hand assets, your super deduction is not given. Only on the newly purchased assets, the super deduction is given. So option D is also going to be the incorrect one. And obviously, option A here is going to be our answer. Okay. So I hope guys this is clear to you all. Moving on to the next question. Okay. So let us look at this scenario now. On 10th January 2023, a customer placed an order for some goods. No deposit was required to be paid. Okay. The supplier delivered the goods to customer on 25th January 2023. Okay. So the VAT invoice was issued on 5th February 2023. Now, and the customer paid for the goods on 15th March 2023. What is the tax point of the supply for VAT purposes? So for VAT purposes, the tax point of supply usually is the dispatch date, right? Or the date when the customer has collected or delivered, the goods are delivered to the customer. So that is known as the basic tax point, right? BTP, right? Basic tax point. Now, basic tax point is nothing but the date on which the customer has to the customer the goods are delivered, or if in case dispatched was mentioned here, then dispatched, right? So 25th January is that date, right? So your basic tax point is that. But if in case the customer has paid for it, or maybe you've raised an invoice for it within a period of 14 days from it, from the basic tax point, then in such a case, that will be your actual tax point. Okay, you have to identify the actual tax point then. So here, as you can see, the tax invoice was issued on 5th February 2023. That means 25th January, from that 11 days, 5th February 2023, the invoice has been raised. So on 5th February, within a period of 14 days it is. So that means technically my answer will be 5th February 2023. Okay. I hope guys it is clear to you all. So my response is going to be 5th February. If I would have chosen 10th January, obviously there is nowhere mentioned. Okay, 10th January is the date when the customer placed the order. That is not going to be the answer. 25th January will not be the answer because it is the basic tax point. And after that, we have to also see the actual tax point if in case the invoice has been raised within a period of 14 days. Okay. Then 5th February is the correct response, and 15th March is not going to be the correct response. That is the date of payment, which is obviously exceeding 14 days from the date of from the date where the goods are delivered to the customer, right? So option C is going to be the correct response here. Okay. Okay. Shruti earns 16,000 pounds a year from her employment. At the end of the tax year, her employer must provide her with a form that shows any taxable benefits that she has been given during the tax year. Okay, so obviously she is an employee, and any sort of taxable benefits that the employer has given her, that is to Shruti, that should be shown. Okay, what is the name of the form where it is shown? So obviously guys, whenever the employer gives any benefit, like maybe the employer has paid for the traveling purposes, where Shruti has probably used her own car for traveling purposes, right? So there are certain AMAPs that we learned last class, right? That maybe Shruti is using her own car, and for the private mile, for the usage of business purposes, she is using her mileage, right? So the employer is reimbursing her that amount. So as per AMAPs, up to 10,000 business miles if you've driven, up to 10,000 business miles, the AMAP is allowed is 0.45 pounds. And maybe say she has driven 11,000 miles for business purposes. Okay. And for the remainder, since it is 11,000, I will get on the remainder 25 pounds, sorry, 0.25 pounds, or you can also say 25 pence. So as per the AMAPs, maybe it is 10,000 into 0.45, which is 4,500, and 1,000 into 0.25, which is 250, right? So 4,500 plus 250, which is 4,750, right? So she should have received maximum 4,750 for her business miles traveled, right? But maybe the employer actually reimbursed her with 5,000 pounds, right? So she got extra. She should have been given 4,750 as per the AMAPs, but she has been given extra. So the extra amount is 250 pounds, which is nothing but a taxable benefit, right? So that is a taxable benefit. And that taxable benefit, where will it be shown? It will be shown in her form that she has to fill separately. That is form P11D, right? P11D. So here, option B is your correct response. Okay guys, let us look at this scenario now. Hornblower Limited commenced trading on 1st February 2020. Hornblower Limited's augmented profits for the first three periods are as follows. Okay. Now, which of the first year for what is the first year for which Hornblower Limited will be required to pay its corporation tax liability by quarterly installments? So, wherever the company is classified as a large company, okay, wherever the company is classified as a large company, that company has to pay quarterly installments for its tax liability. They have to pay their tax liability in quarterly installments. That means once in every 3 months. Okay. Now, in order to be classified or in order to be recognized as a large company, her augmented profits, that means her dividend received from her total profits, plus the dividend received from non-group companies, that is her augmented profits. Okay. So, if her augmented profits exceeds 1.5 million during the year, not during the year, at the start of the year. That means in the previous year, she had already exceeded 1.5 million. And in this year also, if she is expecting to exceed 1.5 million, then she will be classified as a large company. So in the previous year, she should have exceeded. Okay. Then in this year, she will be classified as a large company. Okay. So then as per this scenario, let us look at what will be the correct response. Year ended 31st Jan 2021. Her augmented profits were 1.2 million, not a large company. It should exceed 1.5 million. Year ended 31st January 2022. Her income is 14.5 million, 14.5 million. Sorry, 1.45 million, right? Not 15 million. Here it is 1.2 million, right? It is 1.2 million. It should exceed 1.5 million, but her augmented profits are less than that. So she is not a large company here. Here it is 1.45 million. So she is not a large company here either. Here it is 1.9 million during the year ended 31st January 2023. So here her augmented profits are exceeding 1.5 million. Right? But she will be classified as a large company if in the previous year also it has exceeded, and it has not exceeded in the previous year. So technically at the year ended 31st January 2023, she is not going to be classified as a large company even though she has exceeded the threshold. Okay. In the next year, if again she exceeds it, maybe her income is again 1.9 million. So then in the next year, that is 31st January 2024, she will be considered as a large company because in the previous year also she exceeded 1.5 million threshold, right? But for this year, in the previous year, she has not exceeded the 1.5 million threshold, so she will not be classified as as a large company, right? Always remember during the year, if she has exceeded 10 million augmented profits, okay, then even if she was a large company in the previous year or not, it does not matter. Directly she'll be considered a large company for this year. Okay, but for that she should exceed 10 million for this year, and that she has not exceeded. So anyhow she is not a large company for this year. So what is the first year for which Hornblower Limited will be required to pay its corporation tax liability for the quarterly installments? So she is not a large company in any of the three tax years. So for the year ended 31st January 2021, no. For the year ended 31st January 2022, no. For the year ended 31st January 2023, no. Right? Because obviously in the previous year she is not a large company. Right? So the answer will be none of the above years. Right? I hope guys this is clear to you all. Okay, let us look at this scenario. Sanjeev purchased an antique vase in December 2018 for £2,000 and sold it in May 2022 for the net proceeds of £6,300. Okay, so that means this antique vase, firstly guys, it is a chattel. Right? Chattels are nothing but movable properties, movable tangible properties of the company or of an individual. Okay, movable tangible properties of an individual. It is known as a chattel. And in the chattels also guys, there are two chattels, that is a wasting chattel and a non-wasting chattel. Wasting chattel are the chattels which are, probably used within a period of 50 years. Non-wasting chattels which, go on for a very long period of time. That means movable tangible properties or assets which are exceeding a useful life of 50 years, right? So technically in that there are certain examples like your antique vases and everything, your paintings and everything. Those are your non-wasting chattels. So there is a rule that when a non-wasting chattel is purchased for less than 6,000 and is sold for less than 6,000, then it is completely exempt. Right? It is completely exempt. Even though they have purchased it for 3,000 and sold it for 5,000, they have a chargeable gain, but it is completely exempt. Okay, guys. But if in case they've purchased for 2,000 and they have sold it for 6,300, that means they've purchased for less than 6,000 but sold for more than 6,000, correct? Then a different rule will apply, and that different rule will be nothing but, I'll just mention here, lower of, the different rule will be lower of the normal calculation of gains and 5 divided by 3 into gross proceeds minus 6,000. Okay, always remember 5 divided by 3 into gross proceeds minus 6,000. Okay, this is the rule which is applicable. So guys, firstly, her net proceeds are 6,300 and that is after deducting selling costs of £450. So she also has certain selling costs of £450. What is the capital gain that will arise on the disposal of her vase? So that means her net proceeds after the cost of disposal is 6,300. So technically her gross proceeds are 6,300 plus the cost of disposal 450 pounds, that is 6750 pounds, right? Firstly, we'll do the normal calculation. Normal calculation is 6750, her gross proceeds, minus the cost of disposal 450 pounds. So this will give her a net proceeds of 6,300, right? And she purchased it. Yeah, I'll do it here. She purchased it for 2000. So minus the purchase cost of 2000, that is 4,300. This is as per the normal computation of gains. So as per the normal computation of gains, she should be charged 4,300. But you have to take the lower of this or the other one, that is 5 divided by 3 into gross proceeds minus the benchmark of 6,000, right? So her gross proceeds are nothing but this is her net proceeds, okay, 6,300. We have to take the gross, which is 6,300 plus 450, which is nothing but 6750, right? Minus 6,000 into 5 divided by 3, right? So it will be 6750 minus 6,000 into 5 divided by 3, which will give her 1250 pounds. So as per normal calculation, it is 4,300. As per the 5 by 3 calculation, it is 1250 pounds. You will take the lower of these two, and thus your chargeable gain will be 1250 pounds. So I'll write here 1250. Okay. I hope guys it is clear to you all this sum. If in case you have further doubts regarding it, you can go through the chapter of capital gains, special rules for an individual. Yeah. Let us look at this sum now. CMA started a sole trader business in tax year 2020 to 23 and is required to make her first payment of tax under self-assessment on 31st January 2023. The income tax which was payable for 2022-23 was 4,000 pounds. CMA also has a capital gains tax liability of 800 pounds for the same tax year. Okay. CMA estimated the income tax which is payable for the tax year 2023-24 is what is happening is 5210, right? So CMA has estimated that the tax payable for 2022-23 is 5210. How much tax must CMA pay to HMRC on 31st January 2024? Ignore any national insurance contributions. Okay. Firstly, guys, she has just started as a sole trader in the tax year 2022-23. In the tax year 2022-23. So as per the tax administration of individuals, in the first year of trade, you do not have the previous year relevant earnings. So obviously, you cannot make the payment or account, POAs, right? So in the first tax year, you're not going to make any POAs. But in the second tax year, that means we have to calculate for 2023-24. No, she started trading in the tax year 2022-23 and she has to make a payment on 31st January 2024. The income tax payable was 4,000 and CMA estimated income tax payable, yes. So in the tax year 2023-24, that is only the scenario, guys. So firstly, in this year, she will make no POAs, right? No POAs will be there, right? Her total tax liability for this year was 4,000 pounds. So for the tax year 2022-23, you will take her previous year relevant earnings and her previous year tax, sorry, not relevant earnings, the tax liability, and the previous year for the calculation of POAs. You only take two things, that is your this thing, which is the income tax, plus the class 4 NICs, right? For the calculation of POAs, what you will do is for this tax year, you will check the previous year income tax and class 4 NICs, right? So in the previous year, guys, they have not provided me any class 4 NICs. They have just provided me the capital gains tax and the income tax, right? So that is only going to be my income, right, of the previous year. So 4,000 is going to be my income. So the POAs that I will pay in two parts, two installments. That is 4,000 divided by 2, 2,000 pounds per year. Okay, for the tax year 2022-23, because I have a previous year now which has certain income tax liability calculation. Correct? For 2022-23, I will have no POAs because in the previous year I have no relevance of the income tax liability. Okay, because she just started trading in the tax year 2022-23. Okay, so firstly, these POAs, when will they be paid? 2000 will be paid for the tax year 2022-23. 2000 will be paid on 31st Jan 2023. Sorry, it will be paid the tax year is 2023-24, right? So it will be paid on 31st Jan 2024, right? One payment is there during the tax year and the other payment of 2000 will be made on 31st July 2024. But you have to identify that how much she has to pay on 31st January 2024. So firstly, she has to pay this 2000 on 31st January 2024, correct? And obviously for her tax year 2022-23, her income tax liability was 4,000 and you can see her CGT. Where is that CGT? Yes, capital gains tax liability was also 800 pounds. So this also she has to pay for the tax year 2022-23, right? And this when she have to pay when she files her return. So this tax year ends on 5th April 23 and the next 31st January will be 31st January 2024, right? So she will pay this 4,800 also on 31st January 2024. So she'll make her first POA on 31st January 2024 and also the total income tax liability for the tax year 2023, 2022, 24. So the total will be 2,000 plus 4,800. That will give us 6,800. Okay guys, I hope it is clear to you all. We'll click the answer 6,800. Moving on to the next question. Okay. Now, Beverly earned a salary of 1,05,800 pounds during the tax year 2022-23. Beverly had no other income during the tax year. During the tax year 2022-23, Beverly made a contribution of 900 pounds net to the personal pension scheme. How much personal allowance will Beverly be entitled to for the tax year 2022-23? Now she is employed. If she would have contributed to the occupational pension scheme, for the contribution to the occupational pension scheme, she would have directly deducted the amount of the contribution made as a relief. Okay. But since she is making a contribution to the personal pension contribution fund, that she will get a relief for in the form of extension of ban. Okay. So here, guys, her income is 1,05,800. It is exceeding 1 lakh. So whenever it exceeds 1 lakh, your personal allowance is reduced by that amount. So you have to calculate firstly the adjusted net income, right? So what is the adjusted net income? It is your net income. It is your income above 1 lakh, which is 1,05,800 minus any personal pension contributions or any gift aid contributions that you've made. So here you've made a personal pension contribution of 900, but that is net. This is the amount that you've paid, right? So you will get a deduction of 100 divided by 80, correct? Because 20% is paid by HMRC, right? So 900 into 100 divided by 80, you will get 1125. Okay. So 1125 will be reduced and thus my adjusted net income will become 104,675. 675. Okay, 104675 is my adjusted net income, guys. Now I'll calculate my liability, tax liability. Okay. So, okay, what they're asking for, how much personal allowance will Beverly be entitled to? Okay, her personal allowance will reduce. I'm not asked to calculate the tax liability. So, firstly, guys, her total income, adjusted net income, we calculated 104,675. It is still above 1 lakh. So, minus 1 lakh into 50%, right? So, it will be 4675 into 50%, which is 2337.5 it is, but I'm taking it as 2337, right? So this much of her personal allowance will reduce. Okay. So the total personal allowance which is allocated to each taxpayer is 12,570 pounds. But because her income is actually above 1 lakh, her personal allowance is gradually going to be reduced. And we calculated the amount of reduction 2337. Right? So the reduced personal allowance that she will get is nothing but 10,233. Right? I hope guys it is clear to you all. It is going to be option B here. Okay? I hope guys it is clear to you all. With this we move to the next question. Okay. So from here guys we start with our section B. Before starting off with section B, we'll take a short break and after that we are going to continue with the section B part. Okay. We'll take a break after section B also again before starting off with our section C questions. So we'll take a short break of 20 minutes. After that we'll return with the latter part. Okay, guys, I hope we are back from break. Let's start off with section B questions. I'll move to the section B question number one. So, guys, as I told you, in section B question, on the left hand side, you will be given a scenario. On the right hand side, you will be given 5 questions to deal with this scenario. Okay, so just keep in mind, you have to understand 5 different questions here and answer them accordingly, which is related to the same scenario. Okay, so as they mentioned, the following scenario relates to question 16 to question 20. Okay. Uh, Elidith and Douglas. Elidith and Douglas are sister and brother. During the tax year 2022-23, they disposed of a number of assets, including the following. So Elidith has disposed of 2 paintings sold on 5th June 2022. Elidith had originally purchased a set of 3 paintings together on 30th June 2010 for £14,000. Two of the paintings were sold at £45,000 and the market value of the remaining paintings at that time was £18,000. Okay guys, just keep one thing in mind. Here they are testing not your chattelism and everything. Here they are mainly testing the part disposal. Okay. So firstly, your painting had a total cost of 14,000. I'll just do it this side. Yes. Your painting had a total cost of 14,000. Now, you have to take the total market value. Okay. And the total market value is nothing but 45,000 you sold your paintings, right? This is for all 3 paintings, correct? So 2 paintings are sold. For that, the market value of 2 paintings is 45,000. What is the remainder market value? So the market value of the one remaining painting is 18,000, right? So 18,000 is the value. So 45,000 plus 18,000, that is 63,000. So you can say that the paintings that were purchased for 14,000, 3 paintings, those 3 paintings cost is 14,000 and the total market value of those paintings is 63,000. So the paintings which are sold for 45,000, what is their cost, right? That is what we are supposed to identify. So let us first look at the question, what they are trying to say. What is the cost figure that will be used in calculating the chargeable gain on the disposal of Elidith's 2 paintings? Okay, so we have to identify the cost and then eliminate that cost from the disposal proceeds to identify the chargeable gain. Okay, so guys, here the total cost of 3 paintings is 14,000 and thus the total market value of 3 paintings we've identified it to be 63,000. So if the market value of the 2 paintings are 45,000, so what will be the cost of those 2 paintings, right? So we'll just cross multiply here 14,000 into 45,000 divided by 63,000. So once we do that, into 45,000 divided by 63,000, which will get us 14,000 into 45,000 divided by 63,000, that is 10,000 is our cost, guys. 10,000 is our cost. Okay, we have to calculate the cost figure, not the chargeable gain. So here, what is the cost figure that will be included? Obviously, the cost figure we've identified it to be £10,000. Okay, I haven't seen the full screen. I know that. Yes, guys, always remember one thing. Until and unless we don't scroll all the way down, we cannot move to the next question. Okay, so the next question comes, what is the gain on the disposal of a boat by Elidith to her brother? Okay, boats are, guys, your wasting chattels. The boat had been purchased on 1st May 2017 for £5,000. Okay, so the cost is £5,000. Elidith sold the boat to her brother for £4,000 on 30th September 2022 when it was worth £10,000. So technically the market value of that boat was £10,000, but Elidith sold obviously to her brother, so she would charge him less, right? So she sold it to him for £4,000. So technically she has charged 6,000 less, right? But since this is a connected party, that is a transfer between the brother and sister, we do not consider 4,000 to be the deemed disposal proceeds because they can sell at any value. That doesn't mean that, they could have not got the remainder of the value. So here we would say that the deemed disposal proceeds is nothing but the market value of it. Okay. So the deemed disposal proceeds are technically 10,000. That means she should have received at least 10,000 for her chargeable gains calculation, right? And she purchased it for 5,000, so the purchase cost of 5,000 will be deducted. Then Elidith had spent 450 pounds on repainting. These are revenue expenditures, guys. These are every year expenditures which are not included in case of chargeable gains calculation. Only the improvement, or you can say the enhancement expenditures, are included within the calculation of chargeable gains, right? So these repainting costs are not going to be deducted. The boat, and for repainting on the boat, 500 pounds installing a navigating system before, yes, 500 pounds installing a navigating system before she sold the boat to her brother. Okay, so that means she had installed a new navigating system. The boat had not previously had a navigating system. That means this is not a replacement. This is a newly added asset. I mean, a newly added expenditure to the boat, that is a navigating system. So that will be considered as an enhancement of the boat's expenditure. It will be considered as a capital expenditure and that will be deducted because obviously it is enhancing the boat's value by adding a navigating system to it. So 10,000 minus 5,000 minus 500, 4,500 is the cost. You have to identify what is the gain on disposal, right? So she disposed it off for 10,000 and obviously the costs were 5,500 in total. So the answer would be 4,500. That is option C. Okay. Moving on to the next question. Now you have to tell them what is the total period of occupation, actual and also the deemed period, that will be used for the purposes of calculating private residence relief on the disposal of Edith's house. So you just have to calculate the months, I guess. Okay, you have to calculate the months. So there must be a scenario relating to it. Yes, you can see the boat sold is done, the painting calculation is done. Now the house sold. Okay, so guys, whenever a house is sold, which is considered as a private, or you can say the main residence of the person which has been sold, on that, if in case there is sold, you get a private residence relief. Okay, that you can see in the reliefs given to individuals for the capital gains chapter. Okay, now the house had been purchased on 1st December 2008 and has been Edith's only main residence throughout the whole 170 months of her ownership, right? So technically it has been the main residence for Edith. Now, but guys, it has been the main residence for Edith. So technically this will qualify for private residence relief. The table shows the period of occupation of the house during the ownership. Okay, so we have to see that where it is allowed actually when she has stayed and where it is allowed when the deemed occupation is considered. Okay, so she has occupied the house for 30 months. So for 30 months, it will be completely exempt, right? Unoccupied. And why it was unoccupied? She was required to work elsewhere in UK. So guys, when she is required to work elsewhere in UK, that means she is staying within UK, but because of her work, she is probably staying at a temporary workplace somewhere else or a temporary house she has bought on rent somewhere else. So there she has stayed for 24 months, right? So if she is actually working elsewhere in UK for up to a period of 4 years, then it is considered exempt. That means up to a period of 48 months, it is considered exempt. So she has stayed for 24 months. So this is also exempt, right? So her total exemption is, her exempt period is there and her chargeable period is there. Okay. And the total is, right? So her exempt period is 30 months first, right? Then 24 months this. Her total will be 30 and 24. right? Then she has unoccupied the place again, her private residence, for traveling overseas. Okay, so she has been traveling overseas. Now, for any reasons of absence from your main residence, if you've not occupied for your main residence for any specific or not a specific reason, up to 36 months, that is up to 3 years, it is considered exempt. But if if you've not occupied for your house for any other reason for more than 36 months, then it will be chargeable. Okay, guys. So here she was traveling overseas. So up to 3 years it is exempt. That means up to 36 months it is exempt. But she has stayed overseas for 60 months and not for any specific reasons, just for traveling. So then the remainder is going to be chargeable, right? So 24 will be chargeable here. 36 will be exempt, 24 will be chargeable, and the total will be 60. And this will only be given provided she has occupied, that means 36 months is only provided as an exempt without any reason, provided she has occupied the property before she left and also she has occupied the property after she left. If she has not occupied the property after she left, maybe she left overseas traveling and after that from her overseas country itself she sold her property, so then she will not get the 36 months exemption. She has to occupy the property before she leaves and also occupy the property after she leaves, and then and only then if she sells it, it will call the 36 months exemption will be qualified. Okay, so 36 months will be qualified because you can see here she has occupied the property after she has traveled overseas, right? So she came back and she has occupied the property of 32 months, right? So 32 months will be added here as an exempt part, right? And then again she traveled overseas again, so this will completely be chargeable. So 22 will be added here, 32 is added here in total valuation, and 22 will be added here because we've already given up to 36 months, right? So in the same again we cannot give for the same. Okay, so we've already added the 36 months, so she has traveled again overseas for 22 months, that will not be considered, so that will be chargeable. But guys, but she has unoccupied the property for the last time and then she sold off her property. So the last 9 months is considered as a deemed occupation anyhow, unconditional. 9 months is going to be considered as a deemed occupation anyhow, right? So the last 9 months, wait just a second, 30 plus 24 plus 60 plus 32 plus 22. Plus 20. Okay, it is 168 months, but they are showing. Have we taken all the amounts correctly? Yes. I think it is showing 170 months, but the total is actually not tallying here. It is not 170 months. Yes, it is from 1st December onwards. 30 plus 24 plus 60 plus 32 plus 22. That is summing up to 168, guys. So technically there must be some issue here. Okay, but it should sum up to in total 170. So technically, guys, the last months 22 will not completely be chargeable. As I told you, 9 months is considered to be complete exempt months, irrespective of the fact whether wherever she is staying, it is considered unconditionally as a deemed occupation. Okay, so out of which 9 will be exempt. From the 22, I think it should be 24 rather. Okay, 24 rather. So from the 24, 9 is exempt, so 15 will be chargeable. Okay, and the total is 24, then it can sum up to 170 months. Okay, guys. So what is our exempt months that we have to identify? So it will be 30 plus 24 plus 36 plus 32 plus 9. That is going to be 131 months. This will qualify for her private residence relief. Okay. So what is the total period of occupation, actual and deemed, that will be used for the purpose of calculating private residence relief? it will be 131 months that we have calculated. So I'll choose 131 months. Okay, now let us see for the next part. What is Elidit's chargeable gain in respect of cash receipt following the takeover of PLC, River PLC by Lake PLC? So maybe Edith company had some shares in Lake PLC. Elidith had some shares in Lake PLC, but that Lake PLC company that was taken over by River PLC. So probably from River PLC, in return, she would have got such certain other shares. So guys, we have to see that what part of those shares is going to be considered for chargeable gains. Okay. Where is it? Yes. Cash receipt following the takeover of River PLC by Lake PLC on 17th May 2023. Elidith had originally purchased her 1,000 £1 ordinary shares in River PLC on 8 July 2013 and for a value of £6250. Under the terms of the takeover, Elidith received a total cash of £11,400 and $2,001 ordinary shares. That means she had a share value, she had in total 1,000 shares and she purchased each share. Okay, she purchased, the total cost of purchase is 6250, right? So the total cost is guys 6250, whereas on the other hand, she in return she got the total of 11,400 cash, right? And also $2,001 ordinary shares, £1 ordinary shares. So total cost is 6250. We have to identify the total market value. So what is the total market value for the cash? It is 11,400. And for the shares, it is 2,000 shares into £1 per share, right? So that means that is 2,000. So the total market value is 11,400 plus 2,000, that is 13,400, right? So she had the shares at a value of 6250, but in return she got the total market value of 13,400 when Lake PLC was taken over by River PLC. So guys, some of this amount is going to be chargeable, and when such a situation arises, we assume that whatever cash she has received, that she has received because she disposed of part of her shares. Okay, so some part of her shares is disposed of, because of which she has received a cash of 11,400. So this is a part disposal. Okay, so technically what we are trying to do here, we are going to identify the value here. That means the market value is 11,400 for those shares. What is the cost of shares that has been disposed of for receiving 11,400 cash? Okay, that is what we are supposed to identify. Okay guys, now we will just very simply cross multiply here, which is going to be 11,400 is the market value. Okay, her total cost is 6250. For the total cost, her total market value is 13,400. But we have to identify the cost for the market value of 11,400 cash received, right? So if the market value of the total shares is 13,400 and the market value of the shares disposed of is 11,400, what is the cost of the shares which is disposed of, right? So that we can take and then identify the chargeable gain, right? So it will be cross multiplied 6250 into 11,400 divide by, why is it not being erased here? Divide by 13,400 into whatever, right? So it will be 6250 into 11,400 divided by 13,400. Which will give us 5317, right? 5317 is the cost. Correct guys? 5317 is the cost and she sold it and she got cash of 11,400. So there is some issue. 11,400 she received minus the cost of it we identified 5317 by cross multiplying. So 11,400 minus 5317 6083 is going to be her chargeable gain. Okay guys, I hope it is clear to you all. Just let me check if it's correct. Okay guys, I'm so sorry. We made a genuine mistake here. That is, the shares that she got for £1, the value of those shares was not £1, the market value was 3.50 pounds. Okay, just remember that one thing. So technically the market value changes here guys. Okay, 6250 is your total cost. Okay, and your total market value is 11,400 you received cash, but your shares value is 2000 shares you got, and each share is worth 3.5 pounds, right? That is, as soon as the takeover happened, the market value of those shares was 3.5. So that means her share value, her total share value is 2000 into 3.5 per share. That is 7,000. Okay, not 2000. So 11,400 plus 7,000. That is, it is 18,400. Okay. Now we will just do the calculation. So for 6250 cost, the total market value is 18,400. So 11,400 cash, what will be the cost for that? Right? 6250 into 11,400 divided by 18,400. Right? So 6250 into 11,400 divided by 18,400, that will give us 3872. Right? So 3872 is the cost of the disposal, right? 11,400 is the cash that we received minus 3872, which is going to give us 7527.7. I'll take it as 7528. Okay, guys. I hope it is clear. I hope you're not confused. We just forgot to take that value of the quoted shares. Okay. So I'll write here. It is going to be how much did we get? 7527, right? Okay, yes. 7527 pounds. Okay, guys. I hope this question is clear to you, start to end. If there are any other doubts, you can ask me. I think we got 7527.7, right? So we'll take 7528. Okay. 7528 is going to be the answer here. Okay. Now, what is the capital gains due on the disposal of Douglas property? Let us look at Douglas property. Okay. So, sole trade business sold on 31st March 2023. The whole business has been sold on 31st March 2023. Okay, they are asking for property. We are not doing this. They are asking for property. But we'll read through it. So technically, Douglas sold his trade business at the end of tax year 2022-23. This disposal resulted in a chargeable gain of 28,200, which qualifies for the business asset disposal relief. Residential property, oops, oops. The paper is shut. Do I have an option to resume it? Yeah. Now all this is complete. Yeah, on Douglas's property. Yes. Okay, guys. So the chargeable gain on that property was 28,200. Why is it not working here? Okay. Anyway, the chargeable gain, guys, is 28,200. Residential property which was sold. This property was not Douglas's main residence and resulted in a chargeable gain of 1,07,300. So if it is not Douglas's main residence, that means technically for Douglas, it is going to be, there will be no PRR relief, right? PRR relief will not be given. So her total chargeable gain is 1,07,300. Always remember, guys, your annual exempt amount shall be deducted from your residential property first because they are chargeable at a higher value, right? They are chargeable at 18 and 28% depending on the taxable income of that taxpayer. So till 37,700, it will be chargeable at 18% if it is a disposal of a non-residential property. And if in case uh, it is above 37,700, then it will be chargeable at 28%. Okay. So guys, Douglas does not have any taxable income for the tax year 2022. He had no other capital disposals during the year other than those shown above. Right. So firstly, guys, the taxable income of Douglas, that is 37,700. He has no other income. Okay. So her limit, the complete can be used, right? But 28,200 is there. So firstly, the assets which are qualifying for BADR, this is assets qualifying for BADR, correct? Because it is not just an individualistic asset which is sold, the whole business is sold. So they will qualify for the BADR, and there the chargeable gain was 28,200. So till 28,200, already it has been occupied, right, by the BADR, because first it is qualified to your BADR, and obviously this will be chargeable at 10%, right? So from 28,200 to 37,700 then comes into your existence of your residential property which has been disposed of. So from 28,200 to 37,700, it is still within the basic rate band. So on this 18% will be charged, right? Always remember, for your residential property falling within the first 37,700, 18% will be charged, and above that 28% will be charged. Okay. So above that, her income in total is something, how much did she dispose it of for? 1,07,300, right? So for that, you will charge 28%. Okay. Now guys, let us look at how we are supposed to calculate this. Okay. So firstly, 1,07,000. Why is it not working? Yes. 1,07,000. It is just stopping to work. This side it is working. Okay, I'll do it this side only. 1,07,300 is her chargeable gains. From that, first you will deduct the AEA, that is 12,300. That will be deducted. So the remainder 95,000, I guess it is. Wait, let me check. Like 7,300 minus 12,300. 95,000 it is. So on this 95,000, guys, she will be charged the tax on the residential property from 28,200 to 37,700. That is on 9,500. She will be charged 18%. And on the remainder, that is 95,000 is the total, from which 9,500 you charged 18%. So minus 9,500. On the remainder, 85,500 you will charge 28%, right? So 9,500 into 18%, that is 1,710, plus 85,500 into 28%, that is 23,940. So her total income will thus be, her total gain, chargeable gain will thus be 25,650. Okay. I hope guys it is clear to you all. Let us look at the options above provided. 25,650 we can see A option is the correct response. Okay guys, now we jump to the next scenario. Before this guys, we'll take a short break of 10 minutes and return with the remainder of the scenarios to be dealt with. Okay. Okay, guys, shall we continue? Yes, guys. So this is another scenario, and you'll have to check how much IHT was payable in respect of the PET, that is potentially exempt transfers of 4,75,000 made on 26 July 2020 as a result of Magnus's death in July 2022. Right? So technically, she has made a PET of 4,75,000. That means maybe a gift or a transfer of any property or estate to probably her connected parties like her son or something. And in respect of that, if she has died within a period of 7 years, then that PET will become chargeable. Right? So she has made a PET on 26 July 2020, whereas she died on July 2022. Right? So technically, within a period of 2 years, she has died. So this PET becomes chargeable. Now, on Magnus's death, right? There are two parties, that is Magnus and Senga. Magnus died on 30th July 2022. Magnus lifetime transfers. During his lifetime, he made the following transfers after taking into account any available exemptions. Okay. So, on 20th January 2014, potentially exempt transfers PETs with a transfer value of 90,000. 11th May 2014, chargeable lifetime transfers of 1,15,000, and 26 July 2020, sorry, potentially exempt transfers of 4,75,000. So you have to tell them that how much of the PET is payable, IHT is payable in respect of the PET of 4,75,000 pounds transfer made on 26 July 2020 as a result of Magnus's death in July 2022. Right? So technically, guys, on death, the amount which is paid on tax is 40%. Correct? Now, this in case of your this thing, firstly you have to take into consideration that whatever other things that you've transferred in the previous 7 years, those will become taxable now. Okay. So you can see, guys, she died on 30th July 2022. You have to take back 7 years. That means till 30th July 2015, whatever transfer she has made, PET or CLT, that will be chargeable. Okay. So technically this is chargeable, potentially exempt transfers because this is in July. This is also chargeable CLTs with a value of 1,15,000 pounds. Right. So technically we have to calculate for this PET. Okay. So when we calculate for this PET, 4,75,000 is the value of the transfer, right? 4,75,000 is the value of the transfer, and she will get a nil rate band of 3,25,000 because obviously now the PET has become chargeable. But guys, for this, previously there was a CLT made, right? So CLT would have claimed 1,15,000 of the nil rate band, right? So from this 3,25,000, 1,15,000 of the nil rate band shall be claimed, correct? So 3,25,000 minus 1,15,000. So she will get a nil rate band of only 2,10,000 this time, right? She will get a nil rate band of only 2,10,000. So the remainder will be chargeable, correct, guys? So it will be 4,75,000 minus 2,10,000. That is going to give us 2,65,000. And on this, 40% tax will be paid. So it will be 1,06,000. Always remember, guys, this will not be considered because obviously we have to calculate the death tax. So on the death, this is older than 7 years, right? You can only consider the 30th July 2015 and this is 20th January 2014, right? So technically this will not be considered. So the value will be 1,06,000. Okay, I have not reviewed the whole screen. What is the amount of inheritance tax liability on Magnus's death estate? Okay. So we have Magnus's death estate here, guys. The value of Magnus's death estate was 12 lakh for inheritance tax purposes. This included a main residence of 2 lakh pounds at the date of his death. Magnus will left 6 lakh pounds to his wife Sanga, the main residence of her daughter, at the main residence to his daughter, and the residue of the estate to his son. Right? So the total value is 12 lakh. So sorry, guys. Yes, the total value of his estate is 12 lakh. Obviously, from this, he transferred 6 lakh pounds of estate to his wife. So this is an interspouse transfer. So interspouse transfer, guys, whatever is the value, it is always going to be completely exempt, right? It is always going to be completely exempt. So this will be exempt. This will be deducted, right? So for the remainder of 6 lakh, now what will happen? From this 6 lakh, he has also transferred the main residence of 2 lakh pounds at his death. To whom did he transfer? Magnus's will left to his wife, Sanga. No. So this included a main residence valued at 2 lakh. Okay. So technically whatever he transferred to his wife, that also included a value of a residence that is 2 lakh pounds to his wife, Sanga. The main residence, okay. He technically transferred the main residence to his daughter. Okay. So whenever he has transferred the main residence, that is his place of house, to his daughter or to his son, that means his descendants. So then in such a case, we also receive a residence nil rate band that is of up to 1,75,000 pounds. Okay. So here the value of the main residence was 2 lakh pounds. So she will get a deduction of up to 1,75,000 pounds. So 1,75,000 pounds will also be deducted from here. Correct. And the residue of the estate to his son. So that will be taxable. Correct. So the remainder is going to be nothing but 6 lakh minus 1,75,000, which is going to be 4,25,000. This will be multiplied into 40% because this is the transfer at the death estate. 4,25,000 into 40%. That is going to give us 1,70,000 pounds. Okay, guys, I hope this is clear to you all, start to end. Oops. Okay, guys. Now let us understand what would be the IHT implications have been if, under the terms of his will, Magnus has left the residue of his estate to his grandchildren rather than his son. So if in case Magnus actually left the estate to his grandchildren rather than his son, so it is actually beneficial because you are skipping generations here. Okay, so when Magnus actually would have transferred the death estate to his son, so his son would pay IHT on it. Then again, if his son would transfer to his son, so then again they would pay IHT. So rather what you can do is you can actually do the skipping generation. So Magnus directly transferred to his grandchildren. That is also a death estate consideration, right? For the RNRB, for the main residence. Because it is to his direct descendants, right? It is his son's son. So that is a direct descendant. So then in such a case, what would be the reality of it? A, it would remove the potential for the double charge to IHT before Sanga's estate is inherited to his grandchildren. Obviously, yes, correct. It would remove the potential of the double charge because, guys, there will not be double charge. His son will take, at that time he'll pay. His grandson will be, it will be transferred then to his grandson. Again, he will pay the IHT. So rather, if he is directly transferred to his grandchildren, then nothing he has to pay, correct? Second one, it would have reduced the amount of IHT payable in respect of Magnus's death estate when he dies. Okay, so then in such a case it would not reduce, correct? It will remain the same, right? It's just that they are skipping generation to actually save the double tax on the IHT by transferring to his son, to his grandchildren directly. Okay. It would not result in any savings of IST for Magnus for his son or his grandchildren. Obviously, it would result in savings. And the last one, it would reduce the inheritance tax liability when Magnus's grandchildren die. That will not be the effect. So I think option A is going to be the correct response here. Moving on to the next question. Okay, guys. If Senga were to die on 15th December 2023, how much IHT would she have saved as a result of making the cash gift of £15,000 to her son on 15th August 2007 rather than retaining this cash until her death? Okay, so you have to identify how many cash savings he will make if in case she transfers it before she is dying, and if she transfers it on her death estate. So what will be the difference and what will be the savings? Okay. What is the value? They said 15,000 cash gift, right? So we don't need to look at the scenario. We can just directly do it here because in the scenario, I think it is any which way is not mentioned, right? So 15,000, it doesn't work here only. Yes, guys. 15,000 if she would have transferred during her lifetime. Okay, Sangha would have transferred during her lifetime to her son a cash gift of 15,000. 3,000, firstly, it will not be classified as a small gift exemption or anything. 3,000 would be deducted as her annual exemption for the current year. Then again, 3,000 would be deducted as an annual exemption for the previous year, right? So only 9,000 would have been chargeable. Correct. Only 9,000 would have been chargeable. And on this, on her death, she would pay 40% tax because it will become chargeable because she has died within a period of 7 years. Right? Technically, when did she transfer? On 15 December 2023, if she were to die, she transferred it on 15th August 2017. Right? So that is within the period of 7 years of death. So that means she will get an AE for both, but on this 40% will be chargeable. So 9,000 into 40%, that will give us a value of 3,600. But guys, also remember one thing, there is a taper relief which is given on death, and it depends on the difference in the dates between the date of death and the date of gift. Okay, so she has gifted, when she gifted on 15th August 2017 and died on 15th December 2023. 15th August 2017, 15th December 2023. So this is how many years? August 2017 to 2018, 2019, 2020, 2021, 2022, 2023, right? 6 years, and also after that around 6 months, right? So it has surpassed 6 years. So it is within the category of 6 to 7 years for taper relief, right? So when it is within the category of 6 to 7 years of taper relief, you will get 80% taper relief from your total liability, right? So your total liability is 3,600. From this, 80% is deducted as taper relief. So 80% is 2,880. So 2,880 additional exemption you will get as your taper relief, and only the remainder to 720 will be chargeable, right? So only 720 is chargeable, guys, if she makes a gift to her son on 15th August 2017 itself. Okay. But if she makes the gift of £15,000 to her son directly on her death estate, so what will happen, guys? On the death estate, you do not get any annual exemptions, correct? So directly on 15,000, 40% will be chargeable. So 15,000 into 40%, that is nothing but 6,000, right? So she would have paid 6,000. So how many savings is she making? 6,000 minus 720, that is 5280, right? 5280, and thus your answer will be, what have they asked? How much she would have saved? Yes, 5280, option B. Okay, guys, I hope it is clear to you all. Okay, moving on to the next question. If Senga were to die on 15 December 2023, who would be responsible for paying the additional inheritance tax arising from the cash gift to Senga's son on 15th August 2017? Okay. And when would this IHT be due? Okay. So you have to check if Senga were to die on this on 15th December 2023, who would be responsible for paying the tax? Obviously, Senga's son will pay because he has taken all the estate, right? So, firstly, we know that Senga's son will pay. When will he pay? On the death, the amount should be paid the month end of death. Okay, whatever is the month end of that. From that, 6 months later, by that date, you are supposed to pay. Right? So, she died on 15 December 2023. So, her month end of death is nothing but um, son is paying is nothing but 31st December 2023. Correct? 6 months from here, that means it will be January, February, March, April, May, and June. Right? So 30th June 2023. So the son will pay on 30th June 2023. Sorry, 2024. I'm so sorry, guys. She died on 2023, right? So 6 months from that will be 2024. So it will be option A. Correct, guys? Okay, now this is another scenario that is of VAT. So we'll do this scenario, but before that we'll take a 10-minute short break. Okay, guys. I hope we have returned from the break. Now let us solve last section B question for the YT revision, and then we'll be done with our portion for the syllabus for our YT revision. So let's get started. The following scenario relates to question 26 to question 30. You should assume today's date is 1st December 2023. Archelin Limited began trading on 1st September 2023. The company's outputs and inputs exclusive of VAT. Okay, so that means all these are exclusive of VAT. For the first 3 months of trade were as follows. So that means they started trading on 1st September and their output is here mentioned to us, right? Yes. For September, their sales are 7,000. October it is 8,000. November it is 11,500. Always remember, guys, whenever the sales of the company, okay, whenever the sales of the company of the current and the past 12 months exceed 85,000 pounds, it becomes a mandatory requirement for the company to register for VAT. And VAT is actually they pay certain VAT charges on their purchases, and also they recover their input VAT by selling of the goods to the retailers if in case it is a wholesaler business. So they are selling off their goods to the retailers and they collect their output VAT from them. So the net is actually given to HMRC and their input VAT is completely recoverable provided they are registered for VAT. Okay. So guys, here firstly, their sales are 7,000, 8,000, and 11,500 for the first 3 months, which is 7,000 plus 8,000 plus 11,500. It is just 26,500. So obviously it is below 85,000. So they are not having a mandatory requirement to register for VAT. All inputs were standard rated. So that means 20% VAT was there on all the outputs. Sorry, on all the inputs. That means probably the purchase is the inventory that they have. Okay. Now for VAT registration, Archelin Limited is expecting a large sales order of 1,20,000 pounds on 1st December 2023. That means maybe they found a large customer who is willing to purchase a bulk quantity of 1,20,000 pounds worth of sales. So in the next month, at the start of the month itself, they are going to have 1,20,000 pounds of sales, right? And so will register for VAT on the date when it is obliged to do so as a result of this order. On that date, the value of inventory held by Archelin Limited is expected to be 20,000 exclusive of VAT. Okay. So guys, if in case they are expecting, so technically by December itself, in the next month itself, they will exceed the threshold of 85,000 pounds. Correct? So, if they exceed the threshold of 85,000 pounds in the next month itself, because obviously their sales in the next month, only in the month of December itself, it is going to be 1,20,000 pounds, right? So, technically, guys, if they know that they are going to exceed, they should inform HMRC immediately, right? They should inform HMRC immediately. That means in the month of December, if they know they are going to exceed 85,000 pounds, and they will mandatorily become uh, mandatorily become a member of the VAT. So then in such a case, they, as per the future prospects test, they should inform HMRC by the end of that month. So they are expecting by 1st December 2023 to be registered for VAT mandatorily. So they should inform HMRC by 31st December 2023 for the same. Okay, that this month I am exceeding it, so I should register for VAT. They should voluntarily do it. Okay, and if they have registered for VAT, they will be effective as a member of VAT from 1st December onwards. Right, from 1st December itself. Okay, now let us look at what the question is asking us. Once registered, Which one of the following statements about VAT invoices issued by Archeline Limited will be correct? Okay, so once they have registered, what will be correct for them? A customer's name and address must be provided on the detailed VAT invoice. Obviously, that will be there. So option A is correct. An electronic VAT invoice can be issued even if the Archeline Limited's customer does not agree to receive invoices by this method. Obviously, guys, that should not be there. If the customer asks you to provide through any other means, then you should do it through any other means other than the electronic means, right? So that should be that is not the real case scenario. That is wrong, right? VAT invoices must be produced where Archeline's customers are not taxable persons. So VAT invoices must not be produced because the customers are not VAT registered, right? So this option is also wrong. Lastly, Archeline Limiteds can issue a less detailed invoice for supply of 350 pounds including VAT. That is not true. The limit is lower than that, right? So option A is going to be the answer. Okay, I have not scrolled all the way. Okay, guys. Now they are asking by which date should. Wait, I'll scroll this down. It's not required right now. Yeah. Oops. By which date should Archeline Limited notify HMRC of its requirement to register for VAT, and by which date will that registration be effective from? So as I told you guys, for the month of September, October, November, they are not exceeding the threshold of 85,000. They are exceeding it on 1st December itself because they are making a very big sale on 1st December itself, which is 1,20,000 pounds here, right? So they are exceeding the threshold on 1st December itself. So they should voluntarily notify HMRC about it by the month end, that is by 30th December 2023. And as I told you guys, it will be effective from 1st December 2023. Okay. So, our answer will be date of notification to HMRC. You have to notify HMRC by 30th December 2023. I'm not allowed to click on this. Yeah, option D. By 30th December 2023, and it will be effective from 1st December 2023 onwards, right? So this is going to be the correct response, option B. Moving on to the next question. Okay. By what amount of input VAT, what is the amount of input VAT that can be recovered from pre-registration inputs? So if in case you are voluntarily registering, okay, and from pre-registration of VAT, what are the additional benefits that you can get? So always remember, if in case I am registering for VAT and effective from 1st December 2023, so any services that I have provided in the previous 6 months, those will be considered in the VAT calculation. That means the input VAT that I have paid on them, those will be recoverable. Okay, and any goods that I have purchased 4 years before being registered to VAT, the input VAT that I have paid on them, that will also be recoverable because I am registered on 1st December 2023. 4 years before that, any goods purchased, and 6 months before that, any services provided. But there is a condition on these goods which are purchased. That means they should remain in the inventory on the date when I have registered. They should remain in the inventory on the date when I have registered. Then I would say that okay, these goods were purchased and they were sold after the VAT has been registered for. So technically, maybe my intention was to hold these goods so that once I become registered, then I would be a registered VAT person and then sell these goods and claim the output VAT from the customers, right? So these goods should be in inventory. So technically, guys, you can see here in this case, they have clearly said that here, this line. On that date, the value of inventory held by Archeline Limited is 20,000 pounds. Right? So on that date, their value of inventory was 20,000 pounds. That means 20,000 pounds worth of goods were there still in inventory. So that will be considered, right? 20,000 pounds goods will be considered. Then there is services. All three services will be concluded because they are within the 6 months period. So it will be 3,000 plus 4,500 plus 2,367. 3,000 plus 4,500 plus 2,367. That is 9,867. Correct? 9,867 is the value. But guys, only this value is to be considered. That is, it will be 20,000. Okay. No, all three values obviously will be considered. What am I saying? Yeah. So 2,367 plus 4,500 plus 3,000, which will give me 2,367 plus 4,500 plus 3,000. That is 9,867 plus the 20,000 inventory that was held. My total purchase will be considered 29,867. And on this, the input VAT will be charged. I mean, input VAT can be reclaimed. So the input VAT is 20%. That is 1973. Okay, guys. So 1973 is going to be the input VAT that I can reclaim because I voluntarily registered effective from 1st December. Right? So 1973 option B is going to be the correct response here. Moving on to the next question. Okay, so they're asking which one of the following statements about the impact of Archline Limited's VAT registration is correct. Okay, so you have to say that which of these statements about the registration, voluntary registration of input VAT, of VAT for Archline Limited is correct. Archline Limited's non-VAT registered customers will not be negatively impacted. Yes, that is correct. They will not be negatively impacted. So A option is correct. Archline Limited will be able to reclaim input VAT on future purchases. Yes, obviously they will be able to collect the input VAT on future purchases. Wait. So we have only one statement that is correct? And we have to identify that which of the statement is very much correct, right? So guys, I guess this is definitely correct because Archline Limited will be able to reclaim the input VAT on future purchases because they have registered now. Correct? But guys, there is one thing, that is Archline Limited's non-VAT registered customers are negatively impacted. That is kind of true because guys, if in case I am selling off goods to my VAT registered customers, I will also charge output VAT from them. Technically, if I am selling goods at 200 pounds, okay, I have paid 20 pounds VAT on this. Okay, maybe I've paid 20 pounds VAT on this. Maybe I purchased them at 100 pounds. Okay, so 20% was the input VAT that I paid on this. Why is this not working? Oops. Okay, so 20% is the input VAT that I paid on this. Right, I am now registered. So that means I'm shifting my input VAT burden to my customers. So technically, when I'm selling the goods off at 200 pounds, with that 20% VAT also I'm charging to my customers. Correct? Because I want to reclaim my input VAT. Correct? So I will reclaim it from the customers. So technically 20% will be the value, 200 into 20%. 40 pounds also for the VAT I'll charge from my customers. So then my customers, before I was not registered, so I was selling the goods at 200 pounds and the customers had to pay me 200 pounds. But since now I'm VAT registered, it will be 200 pounds plus 40 pounds that the customer have to pay. So that means they will be negatively impacted by this. Okay. Until and unless I don't reduce my sales price. Okay. So option B is going to be the correct option, and yes, they will be negatively impacted. Archline Limited will be able to avoid penalties. That is not true. Penalties will be charged wherever she is not making her payment on the due date. Right? So that is not true. Option D is Archline Limited's VAT registered customers will see an increase in their invoices. They will not see an increase in their invoices probably. They will just know that VAT is separately charged. Okay, VAT is just separately charged. Okay, guys, it is not like they are selling at a higher price. Okay, moving on to the last question of our YT revision classes. What amount of input VAT will Archeline Limited be able to reclaim in relation to the planned employees' expenses for the first VAT quarter? So let us see what are the planned employees' expenses. Yes. So in her future plans, the company is planning to spend the following amounts in relation to employees in its first quarter being registered. So 2700, they are actually, that is inclusive of VAT, okay, on the staff entertainment. Okay, it is inclusive of VAT, so we'll have to remove the VAT amount. Okay, and 13,500 inclusive of VAT on car leasing payments. Correct, guys? On car leasing payments. So both are inclusive of VAT. So technically, this 2700, it represents 100% of cost plus 20% of VAT. So I'll have to calculate the VAT amount because what they are asking for in the question, they are asking for what amount of input VAT will Alchiding Limited be able to claim. So I want to identify the input VAT that I can claim, and that will thus be yeah. Where is that option? Yeah. That will thus be, guys, firstly 2700, that is inclusive of VAT. So I'll have to remove the VAT, input VAT that is there here, right? So it will be 2700, which represents 100% of cost plus 20% of VAT, which is 120%, correct? And what is the 20% of it? I have to remove that, correct? Because VAT is 20%, right? So I'll just cross multiply. So it will be 2700 into 20 divided by 120, or you can also do 1 by 6 whenever VAT is inclusive, right? So 2700 into 1 by 6 also I can do whenever VAT is inclusive, or I can do 20 divided by 120, which will give me 450. So I have paid for the entertaining expenses, right? So that means I have paid for it, so I can reclaim the input VAT on it of 450. Plus for the car leasing also, it is obviously a non-pool, I mean it is a pool car. So that means I've only provided them for the business use. So 13,500 is there. This is also inclusive of VAT. So it will be 20 divided by 120. Same way. Okay. So 13,500 into 20 divided by 120. That is 2250. So the total input VAT that I can claim is 450 plus this 2250 on the car leasing. That will give me 2700, right? So we'll click on the option 2700. Okay, guys, I hope this is clear. With this, guys, we are done with our paper. For the section C, you all can go through it later because it is not solvable here. Okay, I'll just move to the end exam paper. Now, in your, if you want to refer to your paper, or if you want to solve any questions directly through the CB platform, I'll show you how you're supposed to check that how much you've scored and everything, right? We have understood how to understand the interface and go through the paper. And now I'll click on end exam. It will ask me twice to actually choose to end the examination. I have accepted it. Now I'll just exit it. And you can see here there is home. Besides that, there is an option of mark. So if I click on mark, here I can see pre-December 2023 marks. Right? So pre-December 2023 marks, we have just attempted tax UK pre-December 2023 mock on November 26th at 9:44 a.m. So I'll just click on self mark and let us see how much we scored. Okay, roll up score is showing 0. I submitted the paper, right? Wait, I think it must be another one. Self-mark. Yes. So our roll-up score is 54. Maybe somewhere we have not stated the amount correctly. Let us check where it is. Everything is right here. So you can just check, guys. See, guys, if you want to see through the question, there is an option here. Question SEM show. If you show, it will show you the question that was asked. And they will show you the correct option which is there here. Right? If you want to check through the answer, on the right hand side, you have the option question sample answer. If they have an option here, click here. So once you click here, they will show you that how the answer is calculated. Okay. In calculations, mainly they'll show this is a theory question. Right? So all this is correct. Where have we gone wrong? Yeah. You can see here they've shown us the solution also. How we've calculated the answer. Where is our answer different? Everything is correct. 131 months. Okay. 7528. Correct answer is 7528. It is the same answer, guys. I think there is an issue from their side because we've done the answer correctly. Don't tell me we had to put a comma in it. Okay. So guys, our answer is correct. Only there must be some mistake in the posting of it. Yes, this is also correct. Okay. This is also wrong. It is 1,06,000 only. We just did not add a comma. Okay, it is super weird, guys. Usually this does not happen in examination. It is considered correct. Everything is correct. Okay, it is 5973. Only this answer, it is showing a different answer. Let us see what did we do in this. We got 1973. Why is it 5973? Let us look at the solution. Oh, I'm so sorry. I'm so sorry, guys. The inventory at stock was 20,000, but we did not calculate 20% of it. 20,000 into 20%. But we did the total anyway. We took 20,000 plus 9,867. That was 29,867. That is what we did, correct? While calculating. And we directly took 20% of this. We should have got the same answer. 29,867 into 20%. Yes, 5973. I think it's just that I chose the wrong option. Our calculation is same, guys. When you go through the solution, I've written the same answer. Maybe while just clicking the answer, I've chosen the wrong option. So is the reason why this is shown separately. So everything start to end was the same as I've explained you. Everything is start to end correct the way it was expected to be. I hope start to end the question paper and the answer sheet is clear to you all. In examination, always remember, guys, whatever is the amount that they've stated, they will mention that you have not posted the answer correctly. Okay, so please post the answer correctly with the correct amount, whether it is in thousands, pounds, or anything. Please post it correctly. Okay, so with this, guys, our paper is completed. I hope start to end it was clear to you all. If in case you all have any doubts regarding the same, you all can ask me in the comment section. Our paper is done, our syllabus is done. Any additional, if you want to learn additionally the complete taxation from start to end, you can join the IIC Lakshya classes, and obviously you will get a complete information of taxation with us. So please join your classes for actually nurturing, for actually succeeding towards your goal, that is becoming an ACCA. So all the best ACCA aspirants. I know it is a time of stress and you all might already be concerned about how much portion you want to complete, how much you have completed. And guys, just an advice, before going for the paper, please solve at least 3 mocks in hand to ensure that you're very much familiar with the level of difficulty and also the CB platform. And also here you have not been given a timer, but try to keep the timer by yourself so that you can actually complete the paper within 3 hours to ensure that how well you're able to manage the time. Okay, don't ill manage the time, guys. You will have problems in section C otherwise. Okay, so I'm just saying all the best to you all. Please prepare well and give at least 3 to 4 mocks before your examination. and also prepare the study text well from whichever Kaplan author or maybe BPP author or maybe the study hub you are studying from, and solve as many sums as possible, because taxation is a sum of calculation and your concept. Okay, so practicality is very necessary. The conceptuality will not help you any, right? Too much. It will help you to score around 35-40 marks, but that is not the score that we expect, right? We expect to score at least 70. So if in case in examination you have somewhere or the other any sort of issues or difficulties, or maybe the paper is set difficult, any part, then you can deal with it and at least score passing marks of around 55, right? So your passing marks is 50, guys. Please ensure that you prepare well to at least score around 65 to 70, so that you can be rest assured that you are clearing the paper irrespective of the fact whether your paper is difficult or easy. Okay, guys. So all the best for your December 2023 attempt. We meet you with our YouTube revision sessions in the next quarter again. Till then.